Scene one, take one.
Well, for some things, it feels like nothing has changed after a year. What the?
Take two.
Well, for some things, it feels like nothing has changed after a year plus into this pandemic. But in real estate, it couldn't be farther from the truth. Welcome back to another Calgary Real Estate Market update with us at Redline Real Estate here on Redline TV. And again, my name is Darren Langell, and I am one of the founders here at Redline and your host for these monthly market update series. Now, in this video, I'm going to discuss the key items that you need to know about the market data that was just released for April 2021. Let's go. I continue to be amazed by the momentum that Calgary and area real estate is having here in 2021. Ever since we started to get our legs back from under us back in May and June of last year, the momentum has continued to build and build and build. And here I am, standing in front of you on May 1st, discussing how it's built upon itself once again. April 2021 is the #1 selling April on record that the Calgary Real Estate Board has ever had. We sold 3,209 homes this last month. Yes, that means we have even surpassed the figures from our boom years back in 05, 06, and 07. And we cruised past the recent peak of 2013 and 2014. While we continue to face constant changing economic situations on lockdowns, restrictions coming on and off, and our real estate has completely recovered and well beyond. Here is a graph showing how sales did for the month, and then again how it compares to the last 15 years. Look at that total. Let me show you another graph that paints the change that has occurred from this same time last year when we were in the depths of the pause due to those early days of the pandemic. Now, this first graph speaks to the sales per week figure difference. We are right now, if you look closely, at the 750 sales per week range right now. Last year, we were at 125. Now, this second graph shows the percentage change in sales happened in 2021 versus 2020. Yes, you are seeing this right. Upwards of 650% increase in sales during the same weeks when we compare it back to last year. And all of this is happening despite this. It continues to be a bit of a head scratcher for all of us. It's, of course, due to those lower interest rates that we still have. There's increased confidence due to the rollouts of the vaccine. And we have seen a decrease in our unemployment rate from a peak number of 11.3 in Alberta now down to 9.1. But to achieve the best selling April on record, to me and many, there are still a lot of questions about why. But regardless, it's happening. After April, back in 2006 and 7, we did see the sales per numbers adjust down under 3,000. I expect this will probably happen for us this year too. Now, here is a sales per day chart from my analysis showing that it looks like we've already hit the peak sales pace we are likely going to have. In mid-April, we hit a peak of 116 average sales per day over a rolling weekly average. And then since that peak, we've consistently seen that number drop day by day to where we sit at the end of April 30th, with 104. Month over month, we have increased our overall sales by 14.5%. Now, many of my agents and our clients are asking, is this the same across all price ranges? Well, here's a chart that shows the year-over-year sales gain per price range band. Lots of numbers, but what I wanted to bring your attention to is green means we've had over 1,000% growth year over year in that price band. Everything else is showing at least 200% growth. So all price ranges are performing well. But the biggest increases happening are in the higher end and those luxury price points when we compare it to last year. So that's about it for the sales picture. Let's transition to the rest of the monthly real estate story. Let's talk about our inventory. Well, to start, we started the month of April with 5,418 total homes on the market. This was about 7.5% less total inventory than we had the year prior. Now this year, the end of April, we finished off with 6,071. This is a modest increase of about 400 homes. Now, though, we find ourselves with 7.5% more inventory than we had in 2020. Here's a graph that shows how this changed. Here's another graph that shows how we've got to this point, looking back, starting about August, when the market really started to rock and roll. As you'll see, we stayed in a relatively low inventory situation throughout most of 2020, which helped us move from a buyer's market into the now seller's market condition. Here is where we sit when we look back again those 15 years for total active inventory at the end of April. In the last segment, I talked about how we have hit our sales per week peak. Maybe. Well, we have also done that for the listings per week as well. To show this a little bit clearer, let me pull up this graph that I put together from my own little bits of stats. As you'll see, we hit the highest listings per week total in the beginning to middle part of April, with on average about 168 new listings per day. And then now as I record this, we're down to about 134. It doesn't mean we won't see another run up, but as we are firmly in the middle of our spring market now, I don't think personally that we will see those big numbers again this year. Now, of course, each market segment is performing differently. In total, I mentioned we have 7.5% more total inventory. Well, here's the breakdown for those 4 property types. Detached, it's actually still with 1.5% less than last year. Row houses, they've bumped ahead with 10% more. Those semi-detached, 12% less. And then the apartments, they have 33% more. Okay, that provides enough detail about our inventory situation. However, in summary, we are not in a low inventory situation, like many comment on. We remain in a seller's market due to that demand we're seeing to purchase, not because we're sitting at ultra low inventory. Throughout the month, we gained inventory. We didn't see it erode away. This is a critical point as a market that we need to understand and not make generalities around. With that being said, let's shift now over to the pricing picture. Now, as mentioned last month, with this much demand, what comes with it is also an increase in price. At the end of April, we have increased our benchmark sales price up again to $451,400. This is a year-over-year increase of 9%. And this is also a month-over-month increase of 2% or $9,500. And with this, we have now rolled the clock back all the way to about April 2015's home values, which is just shy off of our peak numbers in 2014. This is a very good news story for that greater Calgary real estate market. It should be welcomed news for all of us, not just the homeowners. Home buyers, despite having difficulty with the pace of the buying process, should be happy that they're buying into a healthy market, not one like they have been over the last 6 years, for which it was a declining market and their home values were slightly slipping away. Here's the graph that shows how this has changed across the various districts in the city. The hot spots in our benchmark price growth are basically everywhere, but the suburbs seem to be leading the way. And again, here are those property type breakdowns for you as well. The detached market had the largest year-over-year gain at 11%. Row houses, 6%. Semi-detached, 8%. And even our apartments, again, had a price growth of 4%. But before putting the pricing picture to rest, I wanted to provide some context on how the different price ranges, again, performed in April. First of all, April as a whole had a sales to list price ratio across all 3,909 homes of 98.5%. That as a whole speaks volumes across that number of sales. Wow. Here is the graph that shows the average sales price to list price ratio across those price bands. When looking at this, what do you notice? Well, the hottest part of our market is in that 400,000 all the way up to 800,000 price range. In these ranges, you see that homeowners are almost getting full list price on average. And then as you push up and down, the market softens just a little bit. So whether you're a buyer or a seller or a realtor advising your clients, be sure you're aware of the changes happening within our market. So in summary, all of this continues to paint Calgary an area with the most positive real estate news story we've had in 7+ years. This could not come at a better time, as most Albertans are still very frustrated with the continued constraints on our lives from the ongoing pandemic concerns. But wait, we're not done. We're not done yet. So hang with me for a few more minutes so I can pull this all together, wrap it in a bow, and then send you out in the world. Okay, it's one thing to talk about sales, inventory, prices independently, as I just did, to provide some color and the story, but let me talk to you about how it all works together. To me, that requires talking about two major things. Number one will be the sales to new listings ratio. Number two will be the total months of supply. These tell us if the market is tightening up and starting to push further into seller's market territory, or things maybe they're loosening up and getting further back to balance rather than hot. The first show the sales to new listings ratio for April. So what do you see again? We started the month on a high, up near 80%. Then we saw a bit of a lull as we marched into that perfect combination of public, private, Catholic school breaks along with the Easter long weekend. Things dropped. Then we started to pick things back up all the way till now. As we finished April, we have a sales to listings ratio of 74%. This, just like last month, means still that every 3 out of 4 homes getting listed is selling right away. This again means that we remain in a very healthy seller's market. Now, across the various property types, we are seeing the following. The detached again remains the hottest, 86%. Row houses, 58%. It changes quickly because the volumes aren't as high. Semi-detached at 70%, and then the apartments sales to list ratio at 50%. Now the second item will be the months of supply. Despite that ramp up in new listings this month and the ramp up of those recorded sales, we end the month at nearly the same place we started, with a total months of supply of 1.9 months. Again, the property type breakdown is as follows. The detached, the quickest performing market, has a month of supply of 1.3. Row houses, 2.4. Semi-detached, clipping along at 2. And the apartments, the slowest pace at 4.8 months of supply. So what does it all mean again? Well, as a whole, the market has not got tighter, but it has just continued to maintain that super strong and healthy pace. To me, this provides continued peace of mind that there's no signs of bubble or overheated elements here in the greater Calgary area. I know for us all, it feels like things are flying, but that's because we're comparing them to a very dismal last 7 years. So as a final summary for you today, our real estate market is one of the shining stars in our economy. If you need to make a life move, I can say with confidence now is a great time. It's been a while since realtors like me had the confidence in the market as we do right now. So if you are thinking about it and want to learn more about your local market, property type, price range, please contact us so that we can set you up with an area expert for a free, no obligation consultation. So that's about it. Once again, thank you for watching another market update video with us here at Redline Real Estate on Redline TV. If you have specific questions, please don't hesitate to reach out. Make sure to subscribe and hit that notification bell. See you next month.